Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. In Germany, industrial production just came out. It went down 3.3% in March 2024 over the same month in the previous year, after a revised decrease of 5.3% year on year in April. Month-on-month production inched down 0.4%, but still better than the 0.6% dip that was expected. Still in Germany, factory orders also declined 0.4% on a monthly basis in March, following the 0.8% contraction recorded in February. This reading came in worse than market expectations for an increase of 0.5%. Also on data yesterday, we got Eurozone retail sales up 0.8% in March, above the 0.6% growth forecast, and also the fastest monthly growth for over a year. It was yet another sign that the bloc's economy is beginning to tentatively recover. And the S&P Global UK Construction Purchasing Managers Index for April yesterday rose to 53 in April, up from 50.2 in March, the highest since February 2023, also higher than 50.2 forecasted. The data seems to be showing still an uncertain recovery in Europe and the UK. And on earnings, Disney makes a profit on its video streaming business for the first time. And for big banks, UBS announced net income in the first quarter at $1.8 billion, smashing forecasts. Strong performance in managing wealth and investment banking, as well as gains related to the takeover of Credit Suisse, contributed to the performance. Still on earnings, although BP's first quarter profit and cash flow fell by more than expected and net debt increased, BP is maintaining the pace of share buybacks. Also, BP is improving cost efficiency as it announces simplification of its structures to deliver at least $2 billion of cash cost savings by the end of 2026. BP is the last of the major oil companies to report for the quarter, as we saw Shell, Total Energy and Chevron doing better than expected, while ExxonMobil's profit fell short. But all sustained focus on returning cash to shareholders, with BP pledging to repurchase $3.5 billion of shares in the first half of the year, matching the pace of prior quarters. Exxon is also planning a buyback that could exceed some American tech giants, while Saudi Arabia's Aramco kept its $31 billion dividend payout to the Saudi government and other investors, as the focus is on getting best possible valuations and prioritizing shareholders. Federal Reserve Bank of Minneapolis President Neil Kashkari said in an essay published yesterday that recent inflation data raised questions about whether monetary policy is restrictive enough to fully return price growth to the central bank's 2% target. We also get more comments from central bank heads this week, with the main act coming from Bank of England Monetary Policy Committee rate decision that is tomorrow. TikTok has launched a legal battle against the Attorney General in the US, saying its ban is an illegal affront on free speech. The petition says for the first time in history, Congress has enacted a law that subjects a single named speech platform to a permanent nationwide ban and bars every American from participating in a unique online community with more than 1 billion people worldwide. Apple shares just inched up after a milestone iPad upgrade event. We'll discuss what's new for iPads. Looking at US markets and first quarter performance of stocks, it seems a combination of growing dividends, share buybacks, decent beats, and healthy free cash flow are the ultimate recipe for success. The so-called Magnificent Seven used to lag in dividends, but now less so. Facebook's owner Meta and Alphabet have joined dividend pairs, leaving only Tesla and Amazon as non-dividend payers. Dividend investing is becoming more popular, and increasing dividends and buybacks signals confidence about the future. Quarter one has been generally good after over 80% of S&P 500 companies have reported, and we see 5% earnings growth, the highest since 2022 Q2, and 4% revenue growth, also a 14th consecutive quarterly gain. Corporate America may have become accustomed to navigating the high interest rate environment, even as they expect rate cuts to come sometime this year. The other thing is that narrative continues to count much more than a beat. Tesla, for example, unlike Meta, was behind forecasts, but the message on outlook and plans were much better received. Markets are rewarding a re-strategizing that they understand and that connects to the context. On the artificial intelligence front, markets understand better that timing and scale of monetization is different for different companies, and analysts are researching the value chain and understanding especially how artificial intelligence translates to more revenues, and when it does, and how much of a boost one is likely to see. The answers are different, whether it's an Nvidia or an Apple or a Microsoft, and there are indeed many lesser known, even better positioned AI companies. Indeed, South Africa, you could say, has issues as it prepares for an election. Most black citizens, that's over 80% of the population, no longer see their lives getting better. Incomes have stagnated since 2008. Unemployment is rising to 30%. Power cuts, water cuts, and corruption are all rife. But South Africa is not a poor society. Consumer spend in Q4 2023 was $160 billion. If you compare that to a total quarterly consumer spend of about $10 billion in Nigeria, Africa's largest economy, as of 2023, you can see that South Africa is way ahead in consumer wealth. And that huge consumer spend has caught the attention of online retail giant Amazon as it launched yesterday an online presence in South Africa, posing the biggest threat perhaps to the dominance of South Africa's largest e-commerce player, Takealot. Amazon is not focusing on the toxic politics, but see the sharp rise in online shopping in South Africa, which has not abated since after the pandemic. Amazon.co.za will offer same-day delivery, next-day delivery with more than 3,000 pickup points. Shoppers will get free delivery on first orders, followed by free delivery for subsequent orders above 500 Rand. Customers in South Africa will also be able to shop from a selection of local and international brands across a broad range of product categories. Competition from a global player can be a good thing. Investments come in. It will wake up local participation. It improves the versatility and quality of the supply chain and should drive costs down, as the scale helps to push economies that can be passed on to consumers. South Africa has the most developed infrastructure in Africa, and it makes sense to use it as an entry point into the high growth African market, seeing growing buying appetite also in the market. Boosting consumer spend is also a way to boost GDP growth, and it comes with improved productivity, higher employment, stronger wages, and economic expansion. Nigeria, for example, is targeting to be a $1 trillion economy by 2030, and that will mean a quantum leap as well in consumer spending. Notably, South Africa also has by far the most generous welfare spend in Africa, which, as well as higher wages, will help to boost consumption. The potential for growth in consumption in Africa is huge, and the likes of Amazon are paying attention.
We're so excited about this new iPad lineup. A more affordable, entry-level iPad with an all-screen design. The new iPad Air, available for the first time in 2 sizes. The remarkably thin and powerful all-new iPad Pro. And of course, the small but mighty iPad Mini. This is the strongest iPad lineup we've ever had. It's the best in the industry by far. With these new iPads, and the introduction of the powerful M4 chip, the big upgrades to Final Cut Pro and Logic Pro for iPad, along with the new Apple Pencil Pro and new Magic Keyboard, it truly is the biggest day for iPad since its introduction. From consumers to pros, iPad enables people to take their ideas, their work, and their creativity to new heights. We can't wait to see what users do with these incredible new iPads. And we look forward to seeing you next month at WWDC, where we'll talk about the future of our platforms and share some exciting details about what's to come. Thank you for joining us. Have a great day.
Apple shares did not move much after Tim Cook described the latest launch of iPads as the most consequential upgrade in the history of the iconic smartphone. Still, it was quite a show, but for more loyal fans, it will be more about the price. The new Air using the M2 chip from the previous M1 goes for $599 for the 11-inch model and $799 for the 13-inch version. The iPad Pro, the thinnest Apple product ever, impossibly thin, they say, and incredibly powerful, with the Super M4 chip, 50% faster than the M2, which you have in the old iPad Pros, and with the organic light emitting diode OLED display screen. With the new most advanced display, Ultra Retina XDR technology starts at $999 for the 11-inch model and $1,299 for the 13-inch. Plus, you have an array of apps upgraded, like the new Logic Pro app for content creators with super fast rendering, also taking animations and creativity to new levels. The Magic Keyboard, which I like, is completely revamped with more buttons and stronger aluminum casing. It doesn't come cheap at $349, and the Apple Pencil Pro will cost $129. Gasp. The price for the old iPad 10th generation has been slashed down, thankfully, to allow entry into the 10th generation iPad world at a lower price level. Obviously, if you don't need a more powerful, faster, thinner machine with a crisper picture and phenomenal brightness, and you're not into content or animation creation, and you don't use advanced music and video edit studio features, and not into graphic intensive games in a big way, you are best advised to stay with your old iPad. The M4, however, is something worth trying out, especially as new AI-powered apps are coming and more powerful apps updates may need that extra M4 speed and efficiency, and soon you will not have choice but to upgrade. At the June 10 Worldwide Developers Conference, we learn more on what's next and Apple's strategy for artificial intelligence software. Apple shares trading was rather thin, like the new iPad, with shares up an unimpressive 0.3% at close yesterday. US markets closed flat yesterday. The Dow Jones and S&P 500 closed slightly higher. Dow up 0.08%, S&P 500 up 0.13%, while the Nasdaq Composite slipped 0.1%. Looking at Asia Pacific markets, they were largely down overnight as the investors digested earnings coming from the region and awaited more results of Japanese giants like Toyota, Mitsubishi, and other companies. As we speak, Nikkei 225 down 1.63%. Hang Seng, that's the Hong Kong index, down 0.84%. Both the Shanghai Composite, Shenzhen Composite are down 0.46% for the Shanghai's 1.18% for the Shenzhen. The South Korean Kospi, however, is up 0.29%. The markets are soon to close. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and for following. Bye-bye.